Hi, Jake. Welcome back to Face.
Hello, hello. Jake is in the house.
Yeah, how are you, buddy? How have you been?
I'm doing good, doing good. Busy, but good.
Did you
Um,
like my promo to see if there were any raindrops on your
Precipitation.
charts that might cause some precipitation?
I did see that.
Okay,
We will talk about some raindrops, but also a
okay,
couple other things I found interesting last night. So yeah,
okay.
I'm ready to go.
All right, so share your screen, my trading warrior brother, and we could take a look. Okay,
Alrighty. Can you see it?
yeah, we have those circles on the S&Ps.
Perfect. And what do you think those circles are?
I think that there's some type of resistance points for big breaks because every one of them produced a decline. So is that what you're implying up here?
Yeah, so, well, first of all, anything can happen in the markets. This is just more of an
Yeah,
observation. But what I've done here is I've just overlaid the monthly Bollinger Band onto the daily chart. So these are daily candles with the monthly Bollinger Band overlaid on top of them. And what's pretty interesting, that's happened actually multiple times this year, and it actually doesn't happen that often in previous years, is anytime we start to melt up with this daily candle through this longer term band, in this case, the monthly band, we do have a pullback. Now, I mention this often when I do this type of analysis is, the Bollinger Bands are flexible. They can
yeah,
move with price, but you can see here, every time we have melted up above that upper band, there has been some type of small pullback, or sometimes small, sometimes absolutely massive, like we had in
right.
February. And so it's interesting to see that we are at this area again. As I mentioned, it's very easy once we close for the month of November that this band can just continue to move up with price. However, even if we did continue this slope here from October, we're still going to be pretty either out a little outside the band or right at it. So it is worth noting. This doesn't mean that I'm mega short or anything. You can see what happened here, that we did have a melt up, a little pullback to that lower band, and then right back up.
Let me.
So it's
Can
not.
I ask you something, Jake? As far as it being actionable, and I notice a lot of these things happen with technical formations too, like wedges, and to me these look like throwovers on the bands. And
Mhm.
is it? Do you have to wait for it to be actionable to get back inside the band? Is that the signal, or do you
I
look to
mean,
take trades before anticipating that it'll come back inside the band?
so in this case, I don't know if I would short this. I think it's, for me, kind of a sign to maybe start cutting off a little exposure to the broad markets.
Okay.
It's not a signal that I would just absolutely, go mortgage the house and go short. But for me personally, everyone's got their own style. This is where I would start to look for divergences. And I've brought up the Williams percent range multiple times in previous videos. But essentially, this is what I'd be looking for: is we have these higher highs here, and we don't
Hmm.
really have any divergence on the percent range. Now we are on the 12. I don't really like to use the Williams percent range 12 on the daily chart. I'd more likely use the 5, since there's 5 trading days in a year, and you can't see any divergence. So that's definitely something to keep in mind too. If this
Okay.
was something I'd be looking for a bigger move down, I'd be looking for divergence. But then again, you didn't really have divergence any other times when we were outside this band. So it's kind of a hard one.
Can you
For me,
explain to viewers what Williams percentage R is?
yeah, so it's essentially a highly sensitive RSI that takes into account the extreme highs and lows between X amount of time. So in this case, it's 5 trading days, since we're on the
Okay.
daily candle. It's something I like to use over the RSI because it does capture divergences before that, and that's kind of why it was created, for that reason, mostly for divergences. So this is something I kind of pull out on these extremes, whether that's an extreme to the downside. So you can see here, we were way outside this lower band, right? We were hitting lower lows on price, but we were hitting higher lows on the percent range on the 5. So that's kind of how I use it. You know, generally you have to wait for some type of confirmation, but that's you know, that's kind of based on whatever trader. Sometimes I'll pull out just the overall the monthly bands, and this has worked multiple times in the last 3 months. August definitely was heating caution as we just continued to melt up. October was a little bit of an early one where we kind of just barely poked out of it and then pulled back. But now we've had multiple times where price action is traded above this area, so it's worth a note. You know, like I said, I'm not massively bearish or anything here, but sometimes you just got to take what the price action's telling you, and so that's kind of where that comes from. I know you mentioned the raindrops, and that's what I want to bring up next. Is, you know, at least from yesterday, the way I like to use the raindrops is really comparing the hollow candle versus the raindrop. So you can see here, if I just split the screen, we've got the hollow candle on the left, we've got the raindrop here on the right. And what I like to do is look for these discrepancies within the wick of a regular candle or hollow candle, whatever type of candle you use. And you'll see here, you know, really anytime that you have a wick like this, but you have volume within that wick, it's generally a sign that there's conviction by buyers. Even though we have a little bit of a wick there on the daily chart, I'm more focused on where's that volume within the range. And that's what the raindrop is telling us is, you know, where is that volume? So you can see here kind of another really close example to what we saw yesterday. This candle right here, almost the same type of hollow candle. It was a hollow red candle. That means that we closed below the previous day, but we did close higher than we opened, hence the hollow part of the candle. And you can see same thing. We had this wick, but we had a lot of volume within that wick. So that's something to keep in mind.
What
and
a
that's
different picture, you know, just having the raindrops compared to just having the candle. There's no message on the left as much as there is a message on the right.
Well, even if, yeah, exactly. And even if you had the volume bars, I mean, the volume bars are just telling you an aggregate amount of volume that happened for the day. It's not telling you where that volume was located. It's not telling you at what price it was located. So being able to use the raindrop on the daily chart will essentially tell us the volume profile for the first and the second half of the day without having to go into that 2-minute chart or that 1-minute chart or 5-minute chart and look for those volume bars and where that was located at a specific price level. The raindrop is just telling you all of that pretty much right off the bat. One, you know, if we wanted to kind of talk about a potential actionable trade idea today, this is one that already kind of has made its breakout yesterday, but I think it's got plenty of room left, is MJ, the marijuana ETF. For the same reason, right? We've got this previous area of resistance. You know, I generally like to make my support and resistance areas double lines because they're zones rather than just a precise area. But you can see here, we broke out of this ascending triangle. We have a lot of volume at the top of the range, and you know, pre-market's already decently up. So this is one that I would definitely look at. Generally, if I'm going to look at an upside kind of area of interest for sellers to come in or just supply to hit the market, I like to anchor a VWAP. So you can see here that we are from this swing high VWAP on November 9th, you know, we're going to be kind of right at it at open. So that's something to definitely consider. Essentially, the anchored VWAP is just being able to say, what's the volume weighted average price from an important area, whether that's a swing high, swing low, really just getting the idea of where the equilibrium price is relative to the last important move. So this would be an area that we'd want to clear before we really start to pick up. But you know, this one, MJ, is an interesting one with the raindrop side of things. Cron, this is another one that's kind of setting up. Same type of thing. You can see here we've got these previous highs. We just put a horizontal resistance line right at these highs. You can see there was volume above that resistance line yesterday. Another thing that I use is something I kind of coined the volume shelf. It's kind of a fancy term for the point of control, but it's more than just the point of control. It's more or less a group of volume nodes. So you can see here, we have the anchored VWAP from this swing low. We also anchor the volume by price from this swing low. And you can see how price is really starting to catch a bid at this area, as well as this volume shelf. And the volume shelf is essentially showing where a majority of shares are have been bought and sold since we bottomed here on October 30th. So it essentially tells us that a majority of people are holding at break even right around this 720, 725 area. And what happens is price is generally able to move off of these areas, kind of like a launch pad, because, you know, it's really a supply and demand thing. If everybody's holding at break even and there's some type of catalyst that sparks demand at all, and people stop selling because they're at break even, this creates that launch pad effect. And I've seen it so many times over the last couple months. Just, you know, this setup is kind of gold for that type of thing. And the same thing, right? If we look at the candle yesterday, you can see we have this wick. But within that wick, there's quite a bit of volume when you look at the raindrop here. So something to consider. I wanted to bring something potentially actionable into today rather than just talk theory on raindrops. But I wanted to also apply the logic and the overall way of thinking to apply that to a real life trade. So that's something definitely to keep an eye on. And then the one thing to be a little hesitant of is the broader markets. But the broader markets, as I mentioned, with the monthly Bollinger Band, the monthly Bollinger Band can continue just to move kind of up with price. It's something that's very flexible. It's not like it's not like an RSI where it's over 80, we have to take caution or maybe pull back. The Bollinger Band, the upper band or the lower band, can just move with price over time. So that's something to keep in mind too.
Can I ask you, Jake, about what's been happening in the markets,
Sure.
depending upon vaccine and
Yeah.
COVID shutdowns? There's been this rotation for a few months now, kind of away from FANG and MAGA and into unloved groups like oil and banks and cyclicals, industrials. And really, it hasn't changed, even though, we've had some vaccine news that's great news here. Do you think that some people think that it's because of COVID that people will rotate back into the stay-at-home issues? Do you have a view on that?
Yeah, I do. For me, I am kind of looking at where was price before COVID, and it's just hard for me to see those types of moves that happened in Zoom and some of these other stocks to be sustainable. I.e., we could have a lockdown for another year, and I think that was already priced into some of these stocks. So I think a lot of people forget that, sometimes things are already priced in. I have Macy's up right now. This is one that I've been that I got in the mid sevens simply because it was just so beaten down. Macy's is essentially priced like it's going to go bankrupt. Maybe it will.
Right.
It's not. Yeah. It's not what I'd call a poster child of a company, but it's also inefficiently priced, I think, here. And you can see that. I don't use lower indicators a lot. Like I said, I'll use the percent range when I am looking for something that's overextended. I like to use the vortex indicator as well, just for trend. And then I will throw up the Williams percent range here as well, but I'll need to pull this back to make this 12.
Yeah,
just because.
on the verge of a MACD cross too.
Yep.
Right.
So
there.
this is kind of what I like to use. So I like to use.
Wow, look at that volume that came in. Was that on the red candle at the lows or coming out of the hole?
Yeah, so look at that. So what I'm doing is I'm starting the volume by price from this July 2018 high, and you can see, look at how much volume is came in at this area. So,
was
just
that
from
liquidation on the red candle, or did that come in? Or okay, so that was like a capitulation day.
Well, this is a monthly candle, so this has
capitulation month.
Yeah. So this has happened though over the last 6 months. Once we capitulated, I doubt there was this much volume here. But this is kind of the thing I'm looking at. One, we have all these oscillators, so I'll kind of go over these real quick. So Williams percent range, I have it circled here because we're finally starting to break out of the of this lower threshold around -80. But you also have to tie that with this MACD cross. So anytime the MACD cross is kind of your leader, and then you can see every time that happened, the Williams percent range starts to tick up. The vortex starts to converge. So the vortex is kind of an indicator that was based on just water vortices. So essentially, when when these big moves start to switch over, this will catch the trend kind of changing. So anytime the red is above the blue, and then the red starts to converge and cross through the blue, is when things get interesting. And you'll see here a lot of the time, this is maybe a month or two lagging the MACD cross. So it's nice to use in conjunction with the MACD, but then you always want to use some type of oscillator like the RSI or percent range just to get an idea to see how things are ramping up. In this case, it's doing exactly what it did the previous times. And like I said, Macy's is not what I'd call a poster child company. It's kind of a crap company, but Riot just went up how much percent in the last couple days, and Riot is about the crappiest company I've ever heard of in my life. So
they got the Bitcoin fever.
Yeah, right? Exactly. And I think this is just the vaccine fever. People, and the thing about Macy's is it's a big enough company where I think, it is still a relatively big online retailer as well. The thing I also want to point out here on top of this oscillator signal that I'm kind of seeing on the MACD vortex and the percent range is the fact that we're kind of getting into what I call a volume gap above, where there's not a lot of liquidity above. And this is something I saw on Marathon Oil a couple weeks ago before we moved up. So if we go to MRO, this is another one that, I wouldn't say is the best company in the world. But if we go on the weekly chart, you'll see the same thing happen, right? So we had this. So what I like to do is I'll anchor it from this high here, and you'll see what happened, right? We had a ton of volume here, almost identical to Macy's. We had this volume gap. Just not a lot of liquidity here, not a lot of buying and selling action in this price level. And you can see what happens. Price is able to move through it incredibly fast because you don't have a lot of friction. And so on top of that, we're now entering this next level. And I'm going to call this a break-even supply level because this is essentially, all of these people were holding at a loss for quite some time. When we hit the high threes, these shares here at 550 to 590 were holding quite the drawdown. So now as the price gets back to this area, these shares are now back to break even, and naturally some people are going to break even and just sell and move on. So that's where you kind of get what I call break even supply because it's initially likely going to act as a supply zone, but then you're definitely probably going to have some consolidation, and likely this may become a launch pad. I know everyone's saying, oh, the MRO just got dropped off the S&P 500. I'm not really too concerned about that. So did ExxonMobil, and ExxonMobil is moving up pretty quickly as well, or at least
great look. And I love that higher low that we put in before this move. Really nice look, Jake. Can you explain on a prior chart the vortex and how you use it and where it converges and diverges from each other? It was a bottom. Yeah, I think.
Yeah, I got to pull it up here.
I see. Because I've never used that indicator, so I'm trying to learn here too, bro.
Yeah, it's actually funny. I randomly found this. I accidentally typed in the wrong indicator like 3 years ago, and I found this. And just kind of it caught my eye because I'm like, oh, this actually predicts trend changes pretty well. And so like anything, I would change this based on what we're on. So I'd actually change this to 12, but it's not going to change really at all. It's actually going to make this signal smoother. And the reason why I'm using 12 is because there's 12 months in a year, and I want to look at the yearly vortex. I want to look at the yearly Williams percent range. So, with the daily, that's why we changed it to 5 or 10, because there's 5 trading days in a week. So if you want to do a 1 week percent range, 2 week, whatever. But you can see here, anytime you have divergence here between these two indicators, you kind of hit a threshold, right? So you've got, it's kind of like the RSI where it does kind of top out at different thresholds. So anytime that you have the either the blue or the red hitting one of these thresholds above or below, that's when you know that divergence has kind of hit its critical point. And so then as the red or the blue start to converge, you can see in this case, we've got our first line here.
Yeah.
And you can see it's right in line with the MACD. So as the MACD is crossing on the monthly and the Williams percent range is starting to move up, this starts to converge. This signal is actually when it crosses, but I mean, at that point, you generally are missing out on a decent move. So anytime the vortex starts to cross with the MACD doing its thing and the percent range doing its thing, that's enough signal for me to get in. That's why I got into Macy's earlier than now, because if I got into Macy's when this crosses, who knows? Macy's may be at $11 by then, and I pretty much just lost a huge move. But that's based on trading style. I'm willing to go in a little early because generally I'm scaling in. I even may buy the dips if there is a huge dip on the earnings tomorrow. But so the way I like to use it is essentially anytime you've got this red at this threshold, and every stock's going to be different. So if we went to Apple, maybe the vortex indicator doesn't top out at 1.4. Maybe it tops out at 1.6. So there is a little bit of a personality to these depending on what stock you're in. However, this is kind of your textbook setup. MACD starting to cross. Obviously, the MACD is a little bit of a lagging indicator, and the monthly candle isn't closed yet for the month. We still have a week and a half or whatever it is. So that's something to consider as well. But it's same thing with the blue, right? And this is kind of how I use the anything that's got a zone, right? I'm generally going to do 2 lines. So I capture this extreme high, but then I actually capture these secondary highs too. And so anytime this blue started to converge down, and then it finally crossed, blue crossed here, that was your signal that this uptrend was definitely ending. You had your MACD starting to break down a little before that. And so using the MACD and the vortex is pretty crucial.
Jake, what was the symbol for the cannabis ETF that you talked about earlier?
MJ.
MJ, and the symbol for the marathon oil again?
MRO.
Okay. What a great presentation. You keep getting better and better, Jake, on your presentation. And, you know, I have to say this, that it's a great product that you guys have at TrendSpider, but it takes a talented technician like you to bring out the real important bullet points of what's been created at TrendSpider, and you're one of the hardest working technicians and insightful that I know. And
thank you. I sincerely appreciate that.
Yeah. So, I mean, you know, you're a great ambassador for the product because you're a very good technician. So with that being said, Jake, how can people, you know, enroll and pick up, you know, check out your software and begin to learn some of the things that you can teach?
Yes, absolutely. So we have trendspider.com. If you go there and you go to pricing, you'll see we have quite a discount today, and we have had a discount, 53% off. So if you did want to give it a try, there's a 7-day free trial. You don't have to sign up and pay today. You essentially start your free trial. As you can see, our current sale decreases by 1% every day. So it's kind of, you know, each day you're missing out on an extra 1%. Now, once we hit 50% off,
it's like your sales like the vortex.
Yeah, we're just you know, we're
converging.
Starting to convert. Yeah, exactly.
All right.
So yeah, you can check it out there. Just trendspider.com/pricing. Now we also have something called TrendSpider University, and you'll see here that we do have something called the Technical Analysis Series. And you'll see here, Vortex. I go over the Vortex for about 10 minutes, really just explaining what it is, how to use it. And we have all different types of videos to explain some of the different things that I use mostly, but also just in general in the trading realm of things when it comes to TrendSpider. And then we actually have what's called TrendSpider University, and you can go through each individual feature, and my colleague Zach does that one. So it's something that you can definitely check out by just going to trendspider.com, go to the pricing tab, and that will give you all the information on the different plans, what comes with those plans, and all that good stuff.
All right. Well, thank you, my trading warrior brother, for coming in and edifying our community here at F.A.C.E and showing your tools and how you approach the markets. And wish you and all of your business associates, your partners, your students, and your family a very happy Thanksgiving, despite everything that's happening around us.
Hey, same to you, and I really appreciate the kind words. It means a lot, and hopefully this was helpful to some that may have not heard of some of these different indicators,
Yeah.
raindrops, that type of thing before. And if anyone has any questions, you can reach out to us. Our company Twitter is at TrendSpider. My personal handle is at TrendSpider_J. So either one of those, you can reach out, and I'll help you out as much as I can.
Thank you, Jake. Everyone,
Thank you.
thank Jake and find him at TrendSpider and some very unique software that could give you an edge. Find your edge. Maybe you find it at TrendSpider. So that's a wrap, everyone. And remember, don't just count your raindrops, count your blessings. And we'll see everyone tomorrow. And good hunting the rest of the session. Thanks again, Jake. And
Hey, thank you.
Jake just posted the link right there in chat for you.
Yep. So if anyone has any questions, please reach out. But Dale, a huge thank you as always. I can't wait for the next session. But as always, I really sincerely appreciate the opportunity to come on and talk.
Okay, yeah, well-deserved compliment. I'm not patronizing you. I've seen you a few times, and you are, and no one could ever doubt your work ethic. Okay, so
Thank you.
thank you, Jake. Take it
All
easy,
right.
buddy.
See
All
ya.
right,
Everyone
everyone.
have a good week.
Yeah, we'll see everyone tomorrow. Good hunting. Adios.